This company is secretly laying off thousands of employees. We all know that the COVID-19 pandemic hit many businesses around the world, but only a few know that one of these businesses also included the tech giant Meta. Ever since then, the tech giant has been struggling to keep the stocks up and maintain its performance. Meta has been going down for years, and now it has resorted to secretly laying off its workforce. Yes, Meta is surprising its employees with letters that their services are no longer needed. Why is this happening? Let's explore. Meta's struggles. When we're saying Meta, we're talking about a parent company that owns two of the planet Earth's most used social media sites, Facebook and Instagram, and our favorite messenger, WhatsApp. Facebook, that has more users than the population of Earth, has gone through multiple evolutionary phases. Now, it's not only a social media platform to connect with your friends, but a complete marketing and business management platform. However, Meta has been struggling with its business for a year now. In October of 2022, Meta's shares took a nosedive, plummeting by a massive 24% to reach their lowest level in nearly 4 years. One Wall Street analyst described it as a train wreck of an earnings report. It's hard to believe that just a year ago, Meta was on top of the world. CEO Mark Zuckerberg had made a grand announcement, declaring with great fanfare that Facebook was changing its name to Meta Platforms, as they set their sights on the metaverse. Back then, Facebook's market value was soaring, reaching an all-time high of over $1 trillion in September of 2021. Their profits and revenue were skyrocketing as advertisers rushed to Facebook and Instagram to reach their billions of users worldwide. However, fast forward to 2022 and things took a dark turn for Meta. The tech industry as a whole faced some serious hits this year, but Meta's stock's plummet has been particularly bad, their shares plummeting by a staggering 67% from a year earlier. This resulted in Meta's market value taking a massive hit of around $700 billion. It's a stark reminder that even the giants of the tech industry can falter, and the volatility of the market is always lurking around the corner. So, what did Meta do to save the day? Zuckerberg's efficiency plan. The plan that Zuckerberg came up with to save Meta was to dedicate a whole year to enhance the company's efficiency. Zuckerberg called 2023 the year of efficiency, and the action began with a massive layoff campaign. In November of 2022, Zuckerberg announced that 13% of the entire Meta's workforce would be going home. Why? Because there was certainly nothing getting done. Furthermore, the massive number of employees meant unnecessary delays in the procedures. The employees reported that in the aftermath of the pandemic, the company was taking months to do a week's work. So Meta secretly laid off 11,000 employees at the end of 2022. You may think it is no secret, but to those who were laid off, it really came as a surprise. These employees were considered expendable and a hurdle to the best functioning of the company. These employees were handed pink slips as a shocker, but the cutoffs haven't stopped yet. Bloomberg has reported that in another week, Meta plans to lay off many more workers. Zuckerberg has reportedly said that, quote, "Next, we're moving on, flattening our org structure and removing some layers in middle management to make decisions faster." There might be thousands more who are bulldozed in this flattening drive of WhatsApp, Facebook, and Instagram owner. A revamped structure is what Zuckerberg's plan entails, and thousands are going to lose their jobs in the process. These workers are showing concern over their jobs and bonuses. Their bonuses were to be distributed in a month. If they're laid off before that, they fear they might not even receive them. The workforce currently at Meta has a, quote, low morale and high anxiety outlook, as Bloomberg reports it. Sadly, this time again, the employees don't know about who's going to leave and who's staying. These demoralized workers are complaining and registering their protests, but is this efficiency plan working? Meta's main concern was to increase efficiency and win back the trust of its investors. It had been taking a nosedive on the business side for a year, losing hundreds of billions. But ever since this year began, the company has gained 54% in stocks. Furthermore, it's seen 2.3% gain in shares. All this shows is that the plan is working so far. It can also be understood that a large workforce can make this task tedious, inefficient, and less creative. Such measures were also taken by Twitter recently. What is clear from this is that thousands of workers are not needed to run tech giants. If we factor in the role of AI in the future, many more jobs may also disappear. For now, Meta is regaining the Wall Street confidence. It's a huge leap from the train wreck it was last year. In addition to this, Meta is also introducing changes for its users. So let's talk about Meta's future. What's in store for Meta? It seems that Zuckerberg is stealing some of Musk's ways to succeed. Well, now that the whole world is dependent on Meta and its 3 big offshoots, they're introducing a paid verification subscription plan. Yeah, yes, much like Twitter Blue. Time to cue one of my favorite memes. Now, Meta is also introducing paid verification. This new feature is to target users that are influencers, businesses, or those who use Meta for marketing. Well, wait until you hear how much it might cost. If you don't like the $8 Twitter tick, Facebook tick will now cost $11.99 for normal users, and those with iOS will be giving $14.99 for the verification checkmark. So now that Meta has decided to mint more money, investors are really happy. Ever since user growth had saturated for Facebook, its growth had stopped. I mean, what would anyone expect? There are already more Facebook users than real people, but this wasn't the only case. Ever since Apple rolled out its feature to stop apps from tracking users' data, Meta's business model that basically spied on everything we did for marketing and other shady purposes also suffered. In the end, Facebook had no choice but to make these changes. If you ask me, a paid tick is better than my literal everything and every wish ending up in someone's marketing database. Although, how can we ever be sure that it stopped? Well, that's a long discussion that we could cover in another video. Coming back to Meta's future, what is even more interesting is how AI advancements are going to affect Meta's usage. AI-driven algorithms might even be more efficient, but once again, it might lead to more layoffs. It is indeed quite exciting to see how the tech giant Meta and its social media sites are evolving. However, this evolution is unfortunate for thousands who have lost their jobs in the process. In short, Meta has been taking blows to investments for quite a while, and it's time for it to re-emerge, especially since TikTok and Twitter are posing heightened competition. And all the while, Apple is making things only harder. So in an attempt to restore efficiency, Zuckerberg has resorted to taking away all employees whose functions can be performed by others available in Meta. What do you think about these moves? Tell us if you're going to be paying for the Facebook blue tick. Considering Facebook's usage and potential for marketing, people may be happy to pay for it. What about you? Let's talk it out in the comments section. Thank you so much for watching, and we'll catch you in the next one.